morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the energy markets and all things energy. There certainly has been some recovery in terms of global energy prices and some question marks surrounding the production story for our domestic energy market, that is Trinidad and Tobago. So how will this impact investors in the year ahead, or at least what is the outlook given all of these uncertainties despite some general recovery in prices? Well, let's take a look. So firstly, we're going to take a look at the average price story for oil and natural gas. And that has been a pretty good story thus far. When we compare the fourth quarter of 2019, and we can see that WTI crude prices in that tealish color at $57 per barrel and Brent crude prices at $63 per barrel, compare relatively favorably to the $52 and $55 per barrel averaging in January 2021. And thereabouts a 9% decline relative to the fourth quarter of 2019 for WTI crude, as well as a roughly 13% decline for Brent crude oil prices. So again, not back fully to the levels that were being experienced prior to the fallout of COVID-19, but certainly heading in the right direction as we can see average quarterly prices trending back upward over the course of 2020 and into the first month of 2021. Natural gas prices, on the other hand, have been about 10% higher in the first month of January on average at $2.60 per MMBTU versus that $2.40 per MMBTU in the fourth quarter of 2019. So certainly some relatively good news in terms of natural gas pricing. In terms of ammonia and methanol, well, it continues to be somewhat of a struggle and a downward trend. We can see that there was some modest recovery in terms of methanol prices, which are up 5% during the October to December 2020 period relative to the October to December 2019 period, from $304 to $321 per metric ton. Ammonia still continues to struggle relatively, down around 9%, again from Q4 2019 of $214 per metric ton to just around $195 per metric ton in the fourth quarter of 2020. And in the case of NGL prices, which would of course impact TTNGL and its investee company, Phoenix Gas Processors Limited, we can see that there has been some recovery and even an advancement in some of the prices. Natural gasoline prices have recovered to just around $1.20 per gallon, which compares relatively favorably to the Q4 2019 level of $1.23 per gallon. And in the case of propane and butane, there have been increases of 20 and 40% respectively, roughly, so certainly an improvement there for NGL prices, which could bode well for NGL and its stock in the coming months if those prices persist or at least very, very much stabilize in those regions. Now, overall, the Energy Commodity Price Index, which is produced by the Central Bank of Trinidad and Tobago, would show on average what the average prices for the top 10 commodities produced by Trinidad and Tobago fetch. And we can see that there would have been a very sharp decline to a low of around 41.6. That's the index number in April 2020. And we can see that overall, that basket of prices for the commodities that we produce has recovered somewhat to around 73.7, but certainly lower on average than what the local energy producers would have received over the past 2 years on average. So that's the pricing story. It seems to be quite positive. On the production side, well, not such a good story right now. We can see natural gas prices or natural gas production over the period September to November 2020, so on a trailing quarterly basis, would have fallen to around 2.5 BCF or billion standard cubic feet per day, which would compare a little bit unfavorably to that September to November 2019 period, where it was averaging just around 3.5 BCF per day, which is roughly a 26% decline in production. And there are certain initiatives in the pipelines, no pun intended, which are expected to improve production, but perhaps not in the 2021 period, but in 2022 and beyond. So let's keep our fingers crossed for that. In terms of NGL exports and production, well, on the production side, we can see that for the full year, well, or the January to November 2019 period of 2019, of course, we would have seen that there was a 15% decline from 7.86 million barrels to just around 6.67 million barrels in the 2020 corresponding period. So again, prices have been trending upward, which is favorable. The production outlook, however, is a little bit clouded and certainly displaying a downward trend over the past couple comparable periods. Now, internationally, We have seen after a very painful year for energy investors where they would have recorded in terms of BP, Royal Dutch Shell, EOG, and energy ETF on overall a roughly 40% decline in 2020. There have been modest gains so far in the first month of the year in 2021, with most stocks recording single-digit increases relative to the S&P 500's decline of around 1% for the now recently concluded January 2021 period. So what does this mean for investors? Well, for those of us investing in local energy stocks, particularly NEL and NGL, the good news is that prices are improving, just to reinforce that, in terms of global benchmarks. However, production remains quite uncertain, and companies are going to remain quite cautious in the current atmosphere, meaning that the dividends which investors would have usually enjoyed or usually enjoy from these companies may be a little bit slow in recovering over the 2021 period, barring some very significant turnaround in performance. At the international level, price improvement is a good thing. There has been global coordination by producers to limit output to stabilize prices. So again, that's another positive driver. Improving sentiment, well, that's a big question mark. In January 2021, energy stocks were up as much as 15 to 20%, and there has been a recent pullback towards the end of January. So that improving sentiment may be a question mark. Monetary and fiscal stimulus remain positive, and a slower vaccine rollout, of course, could derail energy output or energy demand over the coming months. So again, a still very tenuous outlook, but there are some green shoots in terms of the international space, some more questions than answers at the local level. So again, for the energy investor or energy-oriented investor, tread with caution. That's it for this week's edition of the Bourse Report. For more information, you can give us a call at 226-8773, email us at invest@boursefinancial.com, and check out our website at bourseinvestment.com, where all of our research is absolutely free. And of course, you can catch us in today's business section of The Guardian. See you next week. This has been the Bourse Report.